So, Tom here, Flip Anything USA. Don't know how long I'm going to last tonight, but I had a couple things come to mind, and I don't want to forget them, and I want to pass it on. So the other day, I was talking about amortization schedules, and I was telling you it's so important that you get familiar with amortization schedules. And I'm going to make this short tonight, guys. I'm going to run this lesson, and then as long as this glass of wine lasts, that's about how long I'm going to talk. But I got a really big tip, and you don't want to forget it. You don't want to forget it. Before I go to that, before I tell you this, and it's important, you don't want to miss it. Be sure to hit the notification buttons, and please like as many of my videos as you can. I'm trying to climb the ranks of YouTube, and that'll help me if you can go like some of my videos. Anyways, but the other day I was talking about amortization schedules because I realized, God, I hadn't played with an amortization calendar or schedule or calculator, as we call it. And now you got that at the convenience of your on an app. And I'm sorry, I get my laptop going here while I'm talking to you. And it made me realize, so I'm going to give you the details on how property I was buying. I was trying to get it for $320,000, but they had to hear $400,000. They had to hear $400,000, and it was a really great lesson because what happened was, oh, sorry, because this is a professor at a college and his wife, and they had this this is a 24-unit apartment building I bought. I made a lot of money on it too, and bought it really reasonable. I figured it was probably worth $550, something like that, when I bought it, and I was trying to get it for $320. Okay, cool. Glad to hear it, Reginald. I always, when we start these poolside chats, you know what? I don't have a schedule. I just kind of do it when it's convenient, and that's usually after I get my boys to bed if they're tired, and it's school night, so they go to school tomorrow. It's just kind of at usually nighttime or early AM is when I'm available to do this kind of thing, or I'd catch you on the road, of course. So, but listen, you want to take this in. You don't want to forget this. This is so important. So, and I'll do this again sometime with the schedule in my hand. But so basically, what it was is, and then after I thought about it some more. Hey, Reginald, we'll get to that later. A bunch. I bought and sold many buildings, hundreds of real estate deals for sure. But anyways, what I want to get to is the importance on this amortization schedule. So I'm buying this property. I'm trying to get it for $320,000, and I make them an offer. $320,000, 15 years financed at 8%, and I'm going by memory, but this is all pretty close. So he wanted to hear $400,000, and it was actually his idea, so maybe a little bit less interest rate. And so I cut the interest rate in half. We settled up on 4% interest rate, and I bought it for $400,000. So let me tell you what, if you had an amortization schedule in front of you, you could run this. If you ran the total principal and interest paid over a period of 15 years at 4%, paying $320,000, at the end of that 15-year period, it would be a total paid out of about $526,000. So I'm sorry, at 8%. That's $320,000 at 8%. Would come out $526,000 paid over a period of 15 years. Well, by their encouragement, I made them another offer, $400,000 at 4%, which came out to, and I'm getting this backwards a little bit. Okay, no, the $320,000 at 4% came out to $560,000 over a 15-year period. The $400,000 at 4%. The $400,000. This is why I should write things down, right? The offer that I made of $320,000 at 8% gave them a net of $560,000 over a term of 15 years. The offer that they wanted, the $400,000 with a lower interest rate, ended up saving me about $44,000 overall. But there's more to it than that. That's more important. So ultimately we settled up on a $400,000 purchase price, owner carried at 4% over a period of 15 years. That came out to $526,000. So it was a net $44,000 savings to me on the overall term of this thing. Now, even at that, I was still buying at about $150,000, $160,000 under market. But so that's obvious, right? That's why it's so important you play with interest, an interest calculator like this, an amortization calculator, because some people just want to hear, they want to hear the big number. They want to hear how much are you buying it for, and they don't pay attention to the details like the interest rate, and they get lost in it. And that is to your advantage. You know, I always say, I'm like how much? I'm like, how much is the total deal? That's what I think about always. But a lot of people are, how much a month? And that's all they care about, is how much is the payment a month? And those are not good investors, you know what I mean? And so, but with an amortization schedule, you can quickly play with the numbers. You can kind of go back and say, if I give them, you know, $500,000, and maybe I only want to pay $1,500 a month or $3,000 a month or whatever you want to pay. You can work backwards from the payment and extend the term. You know, you might punch in an amount you want to pay and an interest amount you want to pay, and realize you'll be paying on it for 30 years. You can play with it again, and you know, you'll find your comfort level too, what you want as well. And so the importance of that is that you just got to play with the numbers, because if you get a good understanding of the numbers, you're gonna be able to make a lot of money. Now, let me get to my next point before I answer any questions. So here's the key deal, though, and I've had several deals like this. So ultimately, when you sell the property, you give me an example. I did it with that property too. So I sold this property probably 3 or 4 years after I bought it. And I'm guessing now because I can't remember exactly, because I could look it up, but I ain't got time. But I sold it for, I'm going to guess, between $560 and $650. Those numbers sound familiar to me, and I'm pretty good with numbers. But anyways, I sold it for anywhere from $150 to $260 more than I paid for it. I can't remember. It's one or the other. Either way, it's a lot of money. But when I sold it with I sold it as a, you know, where they were going to get their own financing and they were going to clear out my loan, right? So this is something you can do, and I've done this a couple times, is you make a deal, they're going to buy it, and they're going to, you know, you've made your deal. They're going to buy it, say they bought it for $600,000 or say $600,000 or $560,000. So now we're heading towards escrow. We've already made our deal. We've already made our agreement. I'm going to make my money no matter what. Well, then what I do is I go back to them and I say, hey, look. First I go to maybe the seller and I tell them, say, hey, I can pay you off early. Will you discount the note? In other words, the people that I bought it from that carried the note. I say, hey, if I pay you off early within a month or two, would you be willing to discount the payoff? And maybe they'll say no, we want to keep the payments coming in, or maybe they'll say yes, we'll give you $50,000 off. I mean, stuff like that happens. Now on this one, I went to the original sellers that was carrying the note, and I asked them, I said, hey, you want to, you know, will you knock off more? See, so now there's an opportunity to make even a great deal even better. That's why I captioned this way. So I've already got a great deal. I've already made this money. I'm going to resell it. Well, now I have an opportunity to go back to the people and say, hey, because I'm going to pay them off when this thing sells anyways. So I go to them and I say, hey, will you discount the note if I pay you off early? Almost always they'll discount it something. Well, these guys would discount it, but it wasn't that much. So then I worked it the other way. I went to the people that are buying from me. Okay, now take this in. This is super important. These are pearls I'm giving to you. So I went to them and I said, hey, can you come up with more money down? Because if you can, instead of you going and borrowing money at 8% and paying this thing off, I can give you, you know, I don't know, about a $350,000 loan that you can assume at 4%. And so now I'm going to save them 4% on $350,000. So, and I say, I'll tell you what, I'll let you have this note. I'll let you assume this note if you give me another $25,000. All right, what I told them is, I say, I'll have a note for you that you can carry. I'll have a note, an owner carried note for you on this for $350,000 of your purchase price, but it's going to cost you $25,000. And so that's what I ended up doing. It was $26,000 in this case. So here I already had it sold, had the deal made. I tried to get a discount on the note for paying it off early. They wanted to knock off, I don't remember for sure, maybe $5,000 or $10,000. Not enough to make it matter to me. So I went it the other way. I went to the people that were buying it. I said, hey, how about if I finance $350,000 of this purchase at 4%, and I'll charge you $25,000? They went for it, or $26,000. And so we added $26,000 to the purchase price, and I added it. It was just another chunk of money to me. So that's one way you can take a great deal and make it even better. And I've done that on at least 3 occasions, and I did it on a restaurant too. On a restaurant one time, I bought a restaurant for $750,000, and I put $50,000 down, so I had a $700,000 note, and I got the owners to carry it. I think I got them to carry it at like 3%, just crazy low interest rate. And I mean, imagine this: I had a payment of $2,200 a month on a $700,000 loan, and so ultimately, I made a deal with these guys, and then I said, look, how about I carry a note for $700,000 at 3%? And I explained how much it was going to save them, and they're like, hey, that's a great deal. And so what we did is we upped the sale of the price. I said, well, let's add $100,000 to the deal, or whatever it was. I can't remember. It was substantial for sure. And so after we made the deal, it's already a deal. I'm going to close it no matter what. But now I'm saying I can give you a certain amount of financing here that's really worthwhile. And boom, I pick up more money. I explain to them over the amortization schedule. I keep telling you to study. I show them how this is going to save you $70,000 or whatever. Give me, and we add 50 or 100 or whatever. And I'm throwing these numbers off the top of my head because I don't remember, but I remember it's substantial, and I'm not going to play with it right now. You guys can figure it out, okay? So very important you do that. Get familiar with an amortization schedule. It is a fantastic tool, and like I say, interest never sleeps. You want to be the guy collecting the interest. You don't want to be the guy paying the interest. So it's so important. You always try to negotiate the best possible deal you can, but so much of the good deal you negotiate, sometimes you can pay full price for a property. But if you nail it with the interest rate, it doesn't seem like it, but you're saving hundreds of thousands of dollars if you're going to pay it out, if you're going to have it through the full term. And even if you're not, you can sell it to the next guy, and you can add to the price there because the terms are so good. So super important. That dawned on me today while I was driving around, and I thought, man, I got to share that. I don't want to forget that. And like I explained to you on the apartment deal, $44,000 net savings over the term of the loan by paying $80,000 more, okay, on the surface. So that's it for now. You guys got any questions? I know you guys are asking questions. Let me run back here and I'll try to address some of these real quick. How many buildings do I own now? I have little ones, I have big ones. I got shopping centers, office, I don't know, I probably got 10 pretty big ones, and then I've got some small office, some small retail, some houses and stuff like that. I used to have some really big apartment buildings too. I'm done with the apartments. I liked them. I made a lot of money. I bought units for $10,000 a unit. Apartments, I had 24 units. I had 58 units. I had a 21 and a 13 unit. Again, I don't think I paid more than $10,000 for any of them. Sold them all for $55,000 plus. So big money, good money. Tony, what do you got to say here? Tony, was there counter, or you actually made them too? No, Tony, no. That's what I was getting at. So much of what I learned is, and that's why I say, always listen. Really listen to people when you talk to them, because you'll find out they'll make you a better deal than you were even going to offer. You know what I mean? I mean, they'll make you a better deal than you were going to offer. And that's what happened in that case. I offered 320,000 at 8%. And they said, man, we got to hear 400,000. And then I rammed that interest rate down to 4%, and they accepted. But in the end, it was, it was not a gain for them. They were going to lose money overall. So, anyways, that's how it goes sometimes. But no, I do that. A lot of times like one of the first houses I bought, I used to have cards that say, I buy houses under $50,000. And I made these people an offer, and I'll tell this story again sometime, not right now. But I made an offer on a house. I just drove by it. I made an offer on it before I even looked at it. And I said, I'll give you, what did I say? I said, I'll give you 50,000 terms. Or I'll give you 36 or 34,000 cash. They took the cash deal. So they took like, a full third less for cash. And then I just went and borrowed the money and paid them. It was cash to them. So, let's see what else. What's my biggest line of credit? Biggest line of credit I ever had was for like $1.1 million or $1.2 million maybe. And really the way that worked is and that's the best kind of line of credit I like. It's what you call a drawdown. Some banks, though, what they want to do is they want to give you basically a second on one of your properties, but I like a drawdown. I mean, I have lines of credit, for I don't know, a few $100,000 a piece, different banks, and usually they're all paid off. Usually they're all paid off, and then boom, I'll use one, and then or sometimes I'll spend a lot of money, and I'll buy a lot, and I'm like, I'm really real estate heavy and cash flow poor, and I don't know as I get myself in that position, but I do it, and then I pay them down as quickly as I can, but sometimes it's the end of the year, and I got to write Uncle Sam a big check, for taxes, and I'll use a line of credit to pay my taxes. That happens too, but it's okay because there's cash flow to take care of everything, and that's the main thing. So what else? I just don't screw with the apartments anymore. I'm just not crazy about them. I like, let me put it this way. A 30,000 square foot apartment building, okay? That could be, whatever, not 33 unit, 900 square foot each, units. They've got a bathroom. They've got a lot of carpet. They've got 2 sinks, a dishwasher. They got all this stuff that breaks, okay? But take a 30,000 commercial center, 30,000 square foot commercial center. If it has carpet, it's a tenant's deal. Because the tenant improvements that go in a commercial property are generally the tenant's improvements. If there's tile there, they can keep it or they can retile it. So in other words, the burden for the tenant improvements falls more greatly on the people that are in commercial. But when you have an apartment, it's expected of you to have in new tile, whatever, decent tile, clean carpet, all that sort of thing. But I'll give you an example. I had somebody flush the damn towel down a toilet one time in one of my apartment buildings, and it backed up 7 units, okay? 7 times 900 square feet, so whatever that is. I can't even think off the top of my head. About 6,300 square feet of carpet with effluent, just had to rip all the carpet out, rip all the padding out, replace it all, okay? 3 weeks later, it happened again. Same units, had to tear all the carpet, throw it away again. Anyways, so it can be much more of a burden to take care of multifamily and residential stuff than it is commercial. I love commercial. I love office. It's just a clean shell. A lot of times just concrete floors, 1 bathroom per couple thousand square feet sometimes 1 bathroom for 10,000 square feet if it's a shared bathroom. But there's just not near as much to go wrong, to be quite honest with you. So I really like commercial. I really like office and industrial. There's just not near the maintenance. There's hardly any. There isn't even a blade of grass on some of my bigger buildings. There isn't even a blade of grass to shave. You know what I mean? It's all concrete and maybe a couple of planters. Let's see. When talking to a seller, this is from the Fresno wholesaler. When talking to a seller about them carrying a note, do you bring up an interest up front? Have you done deals no interest on the financing? I can't say I've ever had a zero interest, but I have done interest only. So yeah, no, I always drive the interest rate. You know, I always try to drive it, you know, what I think is cool and fair. But like I said, I keep my ears open because sometimes, you know, you find out somebody will do it a lot better. You know, I was telling you guys the other day, I was in Starbucks and one of my attorneys walked in, and I told him, I said, hey, do me a favor, write up a promissory note for $100,000 at 4%. I'm going to borrow it from, you know, so-and-so, somebody that we both knew. And I was kind of borrowing it as a favor to the guy that he knew he wants to get an interest rate on it. And in that conversation, John, that one attorney, he goes, hey, do you need some money? And I go, well, yeah. I said, he goes, well, how much you need? I said, man, I'll borrow $700,000 if you got it. And he goes, well, I don't know if I got quite that much. He goes, 4% interest? I said, sure. And he goes, start it, and a month from now, have the check for you today. I go, sure. And so not only did he prepare that note for me to get the $100,000 I was borrowing from you know, just a guy like myself, somebody local, a friend of mine, but he loaned me another $500,000 at 4%, and it just, you know what I mean? The more credibility you got, the more you do this stuff, the more you'll be around people. People realize, oh, this guy turns, this guy makes money. This, you know, once they know you're good for it, you know, it's good, and I want everybody to get there. But yeah, you know, like I say, get that amortization schedule and just play with it, because it's just an amazing tool. And sometimes you want that in your hand when you are countering, because you can kind of, like I said, you'll figure out that you can get to your number a different way. You know, you can pay more and have lower payments because you lower the interest rate, stretch the term, so you can get there a different way. So it's very important. What else we got? Do I think it'll be a buyer's market soon? Man, I mean, in all honesty, I think if we hadn't gotten Trump as president, I think it would be a disaster right now. You know, I don't think the stock market would be so healthy. I don't think there'd be so much business. I mean, my own businesses that are non-real estate are thriving. They're doing well. They're growing. And I attribute it just because we have much more confidence in the presidency, to be honest. If you're a businessman, you got to have certainty. You know, you like to know, where you stand. And I can tell you, the last 8 years before President Trump was in, man, they would play with the some of the write-offs and things, and if you don't know you got a write-off, you're scared to death to buy a piece of equipment because you don't know that you can write it off over a short term or not. So it just stifles you. You don't know what to do. And right now, you know, the corporate taxes are so high, you can't really grow your company. All you can do is pay the money out and take it as income, and I do that, and then I take the money that I make from other companies and I pour it into real estate too. But I've expanded money. Some of my business, my manufacturing companies, I have put money in those, and I bought equipment, and the only reason I do it is because I feel good. I feel much better about this president. He's friendly to business. You know, he's pro-business, and that was not the case with Obama. So I don't care where you guys stand politically, but you know, we're talking about making money, and I don't care how you feel. I'm happy to. I just want to help everybody make some money here, and you know, you'll come around and feel how you feel after you pay enough taxes and you see all the bullshit that I've seen. You know, you'll come around and feel however you feel, and that's fine. So, but anyways, anybody got any other questions? Which I'll have to tell you guys, I met Trump. I was actually a VIP donor, and I went to an event, and I got to meet him, and I met Rudy Giuliani. Jeff Sessions was there too. I met Don Jr. I got pictures and stuff. Maybe I'll share. I got some video too. But it was a blast. It really was a blast. And but it was neat. It was really a good time. But actually, I saw Trump before that too. 13, 14 years ago, I was staying at the Beverly Hills Hotel, and this is the first year that Trump had the Apprentice. The Apprentice had come out, and well, the guy that now his hands didn't seem particularly small. He's actually a pretty tall guy. He's a pretty big guy. Trump is. He's he's 6 foot something, anyways. But a great guy, Just you can tell why he's so, he's really engaged, and he knows how to talk to people, and he's just honest. And that's what I love about a businessman being in the office, is they just forget all this bullshit. It's, answers are yes, no, let's get it done. Because that's when you're a business person, you don't like stuff to linger. You want to get it off your plate, And so I appreciate that aspect of what we got going now. But anyways, so I was at the Beverly Hills Hotel. It was funny because I had breakfast next to Yoko Ono that morning. I saw Randy Quaid eating over off to the side, and I think actually Dennis Hopper I'd seen at an Inside Cafe on that trip too. And then also I saw Dana Carvey. Dana Carvey was across the pool from me in a cabana, talking to somebody about who knows what. But it was pretty fun. It was pretty relaxed and pretty cool. And but when I was there, this guy walks by, and I go, "Oh man, that looks like the guy that was on The Apprentice." And I look over to my right, and there's one lounge chair empty, and then another guy's there. His name was, I think it was Victor. And I said, "Hey, I think I saw the guy that won The Apprentice." That impressed me more than any of the stars, because I see a lot of that stuff anyhow when I'm downtown in Los Angeles and Hollywood and whatnot. And he said, "Oh," he goes, "Yeah," he goes, "my wife is Caroline, the little blonde that sits next to Trump." And then she come out in her bathing suit just a little while after that. We all sat around the pool and drank all day. And here's a funny story. I'll run this to you real quick too. This is kind of funny too, because so Caroline was Trump's right-hand person on the show, and she only worked it, I think, 1 year. But so we're sitting there, we're talking about different things, and she told me she just wrote a book, and and then later in that day, I said, "Well, maybe I'll see you guys tomorrow." And she goes, "Oh," they go, "No, tomorrow." They go, "We're going to be on the red carpet." Our show, Trump show, is called Survivor. Or no, is The Apprentice is going up against Survivor to be picked, for the best show between those two. And so what happened was, so the next day, they're not there. The next day, I'm still by the pool hanging out. They're there. We're all drinking again and carrying on and having fun. So, but I said to Caroline, I go, "Well, Caroline," because she told me she'd wrote a book, and she said, "Look for me on the red carpet." They're going to interview her on the red carpet. And so I said to her, I go, "So hey, did they interview you on the red carpet?" And she said, "Yeah, they did." And I go, "Did you plug your book? Did you plug your new book?" And she goes, "Oh, no, I didn't." And I go, "What's the name of your book anyways?" And she just turns beet red, and she just kind of looks at me, and she goes, "Never miss an opportunity." So I thought that was so funny, so ironic. But anyways, she actually has a book called Never Miss an Opportunity, and here she missed really one of the best opportunities she could have to plug her book. But anyways, just one more story. What else we got here? Potential deal tomorrow. Meeting with seller. 75,000. No, I did not. No, Ivanka wasn't there. But I'll tell you who was there. And it's funny because I actually made Trump trip on a piece of carpet. And this is like 14 years before I actually met him, up close and personal here at a VIP event. But what happened was I was sitting in the dining room, and there's like this, like if you can imagine walking through a hallway, like there's a hallway running this way. I'm sitting at a table looking, like I'm looking at you right now. And so Trump is walking through with Melania. He was with Melania, both equally about the same height. She was very tall, very beautiful girl, and she's walking in front of him, and they're walking, but it was only through like an 8-foot wide area. So I looked up and saw him, and I looked down, and then I like did a double take, you know, because it's like I looked up, saw him, looked down, like, oh, and then when I did my double take, he had actually just looked over, and then as he was looking away, he saw me do a double take, and so then he did a double take, thinking that maybe he knew me, which he didn't. And so when he does his double take and looks at me, and he caught his foot on the carpet, and he kind of trips a little bit and stumbles and kind of like just didn't fall, but like stumbles and moved, you know, ran fast to catch his footing. And he was like, so I looked up, I do a double take, he does a double take, catches his foot and stumbles out of sight. But anyhow, I thought it was kind of funny. So anyways, but that was my first Trump story. My second Trump story is a whole lot funner, a whole lot more interesting. And that was because when you're a VIP donor, you'll go in. When you're a donor, they'll have donors that are like silver donors, and they have donors that are gold donors or gold star donors. And it's funny because I didn't even realize. So I've got a gold star. Oh, in fact, here, check this out. This is funny. I'm going to show you this only because it's stuck to my laptop. Okay, this is going to take a second. But this is the tag. This is the tag that I was wearing, and you'll see I've got a gold. You'll see that I've got a gold star. See that? See it says Tom, and see it's got that gold star. I stuck that to my laptop. After when you're getting your picture with the president and the other people that are there, you take your tag off and you put it on the back of your jacket so that it's not in the picture, right? But that's my tag from the VIP Trump event that I was at. But somebody said, "Oh, you got a gold star," because I didn't know if I had gold and everybody else had platinum. I didn't know who was a bigwig, but it turned out I was one of the bigger donors. And so they were calling all the bigger donors, the gold star donors, into the small room. And so, it was a room, I don't know how many people, there might have been, 50, but about 7 or 8 of us maybe that had the gold stars. We went into the smaller room, and Trump comes in, and Giuliani was already in there, and and you get into rub elbows with these guys and talk to them, and you tell them, hey, what you think's important, like I won't talk about what I said, but there was guys that were worried about the border wall, and having access to the Rio Grande River. These guys, big cattlemen, like, hey, but we got to have access to the water, and for them it was a chance to kind of talk about some of the issues that were important to them. But it was cool. It was really, really cool, and it was a great event, and it was just nice to have people around that were interested in getting a guy in office that they thought would help, so I really enjoyed it. It was a lot of fun. So I forgot what I was talking about. What else we got there? Oh, let's get back to Single Step Realty. He's got a potential deal tomorrow. He's meeting with the seller. $75,000 ARV. Hang on here. $25K, $30K repair. My offer is $20K, but I'm worried the seller wants to stick at $60K. Okay. Single step, help me out here. Maybe I don't know the terminology. What's ARV? 75,000 annual revenue? I don't know what you're saying. What's 75,000 ARV? Tell me what that is, first of all, please. Oh, after repair value. Okay. Yeah, that's a stretch for me. Just so you know. Okay. Okay, so you're saying it's going to be worth $75,000 if you spend $30 on it. Just be conservative, okay? Your offer is at $20K. But, well, I mean, hey, just don't do it. I mean, listen, when you're making offers, you're in this business to make money. And that means you have to buy it under market. You have to buy it under market. Because if you don't, I mean, you can buy anything at full price, right? And so you're in this business to make money. There is risk in buying property. There is risk in holding it. And the closer you are to paying full price for it, the more you are at risk to lose money. So that's why you have to buy it below market, because things do change. Now, hopefully, you're in an ascending market, or a fairly level market, which I think we're pretty stable right now. But buying that under market is important, because that's your margin. Whatever you buy it under market, that's the money you can make if you turn it immediately. And that's what your safe zone is, to turn it immediately and make that money. If you or if you can afford it, if you can afford to hold, if you want to be a little bit of a speculator, I hold properties for cash flow that I have, and I bought all of them usually under market. But I'm always concerned that I have an exit strategy, so that if things start to crater or go down, and something I'm buying I think is vulnerable to feeling that effect, I immediately want to be able to put it back on the market and get rid of it. And if I bought it under market, I'll be able to jump down and sell it below the current market before the downtrend catches to the value that maybe I even actually paid for it. So I always like to feel safe that if things do start to decline, I can dump what I've got, and worst case break even. But really, worst case to me is usually make some money. So that's my thoughts on that. Okay. Justin says, how would you recommend starting? Man, I recommend starting all the time. With 200,000. Wait a minute, you got 200,000 or 20,000? Or $200? I'm sorry. You're talking about starting with $200. All right, Justin, I'm confused. Are you talking about $200? Okay, $200,000. Okay, okay. Yeah, if you had $200, I wouldn't recommend starting in real estate. Not that you couldn't, but if you got 200,000, I mean, you can. You're in New Jersey. I mean, man, I missed a deal. I had a deal I was trying to get, and I think some insider kind of screwed it up for me. But it was a property in New Jersey, right across from Manhattan. It was a water taxi away, and then maybe a couple miles, line road. I can't remember what do they call that. You probably know. What is that city that's right along the water, right along the water, directly across from Manhattan? Do you know what that is? Anyways, that was one that kind of slipped away. I don't live in New Jersey, but I do business in New York, and I'd been there, and it's right on the tip. I'm gonna say I don't know. They call it Line Road or something, but that was a huge industrial area along the water. No, it wasn't Newark. It's like Riverbank or something like that. Well, I manufacture. I have some inventions and things that I've made, and but I have a machine shop and I manufacture, and so I do business there and here and there, but I manufacture. I have a machine shop. I've taken you guys in my machine shop, but anyways, that's it. I think unless anybody's got a question, I'm going to wrap it up. Yeah, primarily that. I've gotten into some other. I mean, I'm investing in some other software stuff and technology, but yeah, manufacturing is something I've always been involved in, and some construction too, and but primarily the big money is real estate, and so that's why I'm trying to share that, because That's what's really made me the most money of anything I've ever been involved with. It's always been the real estate, and I've had some very profitable stuff happen to me. And that's the other thing. Real estate allows me to expand and invest in some areas that maybe I wouldn't normally invest in, but I've got the money. I've got the money. What was Justin's question? Sorry. Oh, yeah, Justin, okay. Any recommendations on buildings that are best to start with? Well, look, I'll tell you what. I like commercial and I like industrial. And the reason I like those is because the burden sometimes to enhance them and fix them up inside falls on the tenant. The tenant will spend their own money to fix it up inside for whatever business they're going to do. Now, there are cases where sometimes they want you to do a tenant improvement as the landlord, but I don't do tenant improvements. I get money. I can get it done reasonable. I'll say, look, we can help you. We can take care of it at a reasonable amount because, I mean, I've been in construction my whole life, so I can get things done, relatively inexpensively or certainly without a lot of padding. But if but it really doesn't matter. I mean, guys, as long as you're buying it under market, it's all about the deal. I've said it 100 times on here. It's all about the deal. If you're buying something for 30-40% less than it's worth, it doesn't matter if it's a house, a trailer, a building, a piece of land. It can be acreage. As long as you've got a contract to buy it for less than it's worth, and especially if you can negotiate some really good terms like owner carried, then you've done everything you need to do. You can find somebody to take your position and just turn it over to them and either get an assignment fee, or you might have such a good deal that somebody will just loan you the money, because if they'll loan it to you and it'll be secured by that property, and they might even hope that you fail so that they can come back and take the property from you. So shouldn't it be any problem at all, figuring that sort of thing out. So talk about land flipping next video. I'll work on that. I'm just wrapping up the studio, so we'll be able to do some cool stuff with a big green screen behind me, and maybe I can put up the images of different deals that I've done and explain how I've made money on those. But I've flipped a lot of land. I love land. It's very simple. It's just very simple. There's nothing to break. It's just dirt. Now, there can be some issues. You gotta, there's always something with everything. You got to be careful. But you don't want to be in a floodplain. You don't want to be, if you got buildable lots, you want to make sure that there's, water meters and access to sewer, or that it's okay to, put in a septic field, that sort of thing. No, Justin, no. You need to end up becoming the best appraiser in the world in your neighborhood. That's why I say you just look at property that's in your neighborhood. It's not practical. You don't want to spend money, have something appraised. You're going to have to if you're going to borrow money from a bank. They're going to make you do that. But you need to know. You build your knowledge base, learn your neighborhood, look at the for sale signs, look at what's for sale, how many square foot it is, how big is the lot, and before long you'll know exactly what a 2-bedroom 3-bath is worth. And let's just say they're worth 200, and then you find when you can make a deal for 120. It's a no-brainer. You make that deal, you agree to buy it, then you go find somebody to take your position if you're not strong enough to buy it on your own, or you go down there and you put some money down and you close the deal, and then put it back on the market and sell it for maybe a little less than 200 and make yourself a nice chunk of money. So that's kind of how it goes. It's really all about the deal. It doesn't matter what you buy. It's all about the deal. That's where you make your money, on your purchase. Forget about speculating. Forget about holding. And really, I wouldn't even worry about trying to get stuff that cash flows, because if you're just starting, let's just say you got 10 grand or 100 grand. Well, you can sink that into something, all your cash into something, and now maybe you're getting a nice little return, 10% on your $100,000 or 10,000. But at that level, you're not going to really you're not going to grow fast enough for me. Let me put it that way. So once you have millions, then, or hundreds of thousands, then you can buy into stuff that you decide to hold. because it'll be worthwhile. You know, you're getting 10% on $500,000. You got 50,000 a year coming in. You know, I remember I could live on that. You know, I mean, you know, I can't do it now. I mean, I got kids I'm putting through college and everything else. But I remember when I could live on $3,000 a month, and I had $3,000 a month coming in from some rentals that I had, and so it was always comforting to know that I could get by. But you know, I want to have, you know, and now of course I have, you know, far more coming in than I need, but it's kind of the numbers, and it's the reward, and I'm trying to show you guys how to make money, and my kids, and of course, you know, things, you know, who knows, things are going to get tough. It never hurts to have extra money, right? Never hurts to have extra money. So anyways, I'm going to wrap it up. I'm getting tired, and I got stuff to do tomorrow, and I'm tired. So can't wait for the drones flying above, checking out all your properties. Yeah, I think I told you guys, I actually have a nice drone, and I took it up and flew it, and I was gonna have it go a few miles, and I was gonna show you guys all my properties, how they're all within my neighborhood, and then I was gonna maybe even fly it all the way to my office and show you the ones that I own around that area too. But what happened was I had that drone take off, and I lost sight of it or something, and it broke communications, and I had somebody else driving me. And what happens is when it breaks communication, the drone automatically flies back and lands where it took off. So I thought maybe I'd lost it at first, but I lost communication, come back to my house, there it was, landed in my yard. Did it again, lost it again, came back, drove back fast and saw it come in, and it landed itself. So, but it does have some options. I can actually take that thing and say, go up, you know, 200-300 feet and fly from point A to point B and back. And that's probably what I'm going to do. And then we'll see how it comes out. But it hasn't been on the top of my list. But anyhow, hey, thanks for watching, guys. It's, you know, Sunday night, and you know, sure, you got something, you got to go to work tomorrow, whatnot. But I appreciate you hanging out with me and listening in. And you know, look, I'm all I want to do is make you guys money. I just want to help you make money. I can't make it for you. And look, no mentor can put their arm around you and make money. If they make money for you, then you didn't learn anything. You know what I mean? All I can do is try to help you, and I'll give you all the benefit of my experience. You can absolutely do it. I guarantee you can do it. You know, I wasn't born with a silver spoon in my mouth. I've come from very, very modest beginnings, believe me. My folks didn't have money, and but you know, you can. Anybody can do it. We're in America. You know what I mean? You can do it. But it's really all about effort and doing exactly what you're doing right now. You're being engaged. And hey, don't let me forget. You know, I'm giving everybody a gift here down the road here pretty soon. Be sure to email me and type in whether you use an Android or an iPhone. Android or iPhone. Just write that in the subject line and send me an email. You don't have to write anything else. I appreciate some of you guys actually have written and wrote some nice notes. I appreciate that. But please share. Please go check as many of my videos as you can. It helps me go up in the rankings the more likes there are. And especially if you share it out and you tell other people about it wherever you know, if you're in another blog or whatever, you can share it with other people. You know, bring them to the channel. I'd appreciate it. But you know, I don't sell anything. I'm not trying to take a penny from you. All I want to do is help you make money, and that's my reward. That's my reward. And I've actually had some cool stories. Somebody wrote, there's a comment in here earlier today, and it's a guy in the UK, and what's his name? John Brady, I think. Yeah, John Brady. And John, he says he can't watch my poolside chats because it's 3 in the morning in the UK. But he says, you know, it helped motivate him watching me to buy 3 more flats in the UK, and he feels really good about his purchases. But that's how it goes, you know. It's like a big cart, you know. Once you get it loaded and it starts rolling, it's hard to start. It's hard to stop. So that's right now. You got your cart. It's kind of empty maybe right now, but you're going to keep loading it and building it, and pretty soon it is just going to be unstoppable. It's just going to be got the momentum. So, and all that weight of all that cash that you filled it with, right? So, anyways, good night. Please share, subscribe, and thank you for watching, and we'll do it again soon. Thanks.